20% of Americans are going to put their house on the market in the next year. What does that do to inventory? And then what does that imply for prices?
What is going on in the middle of a pandemic? What's going on?
In the middle of
2006. Can we sustain it?
So guys, what's up? So who is right and who is wrong in this insane housing market? Is it the result of real changes and demand in the market? Or will this be a housing bubble that hit us like it did last time in 2008, causing the Great Recession as we know it? Some have said that the value of current home prices is propped up by easy money, low interest rates, and also people with FOMO, fear of missing out. Now, despite what these pundits are saying, some truly believe that this is a monumental shift because of the number of millennials, those in the age of 30 to 34, starting to buy their first home, starting families, and this is only to be accelerated because of the COVID pandemic. Speaking of the COVID pandemic, the work at home shift, this change, I believe, is here to stay.
We still have about 30% that are saying, if I'm able to work remotely, at least part of the time, maybe all the time, then perhaps I want to live somewhere differently than where I live today. Maybe even in somewhere a little more affordable.
People's taste of leaving the big city now and moving to suburbs is something that's going to continue going on for the next couple of years. People are looking for bigger spaces, and the home is a place now to work, to entertain, to live, and also have kids. It's a space for them to learn. At the same time, there's also a shift with people moving to places with lower cost of living. This is something I covered in the last video about why there's a trend of people moving to Florida for sunshine and tax benefits.
The no tax deal in Florida is a big appeal there.
So for today, I want to cover 5 important factors that is causing this strength in the housing market and why I believe it's going to continue on for the next couple of years. I also will do a part 2 this week, which I will talk about the potential issues that's causing what many believe is a bubble. Okay, before we get into the meat of this video, I just want to give a quick thank you for our subscribers. If you're here watching this channel for the first time, this channel is dedicated to financial knowledge and also starting something small and building that together. So if you like what we're talking about, as they say, smash that like, give me a thumbs up if you find the content useful, and also join the Frugal family. So let's get back to the housing market and let's talk more about this. Some YouTubers have said that this is a big bust that's waiting to happen, but I disagree, and I want to start with what the positives are and also to include questions from my clients who are both on the buy and sell side. So they're asking specifically on the sell side, should I sell my home now as people are getting vaccinated? Or should I just wait for higher prices to take place in the next couple of months? Or what should I do? Just wait? From the buy side, buyers are asking, should I continue to look for a home as prices continue to rise? Or with interest rates creeping up, prices might stabilize, might go down. What should I do? I want to answer these questions with the information that I'm providing during the course of this video. And I want to break this down for everybody so that you have the information to navigate, as many have said, this insane market. Now, stay around until the end of this video, and I will share with you 2 insider tips about how to make your offer if you are buying that much stronger to increase your chances of getting your offer accepted. So let's start with these 5 factors. I'm going to start with number 1, give you some stats. As of March 2021, the median home prices in this country is now up to $370,000. That's almost a 16% increase from 1 year ago. Starting with prices, let's look at the economics of what is happening. To many people who are buying or looking to buy, it is still much more cost efficient than renting in a number of large cities and suburbs. With interest rates still at an all-time low, about 3% for the 30-year, this is a great time to buy. Now, a home acts as many things. It is a shelter, an investment, and also a tax deduction. Number two, demographic trends. There are 72 million millennials in this country. This is really encouraging because these millennials are approaching their peak home buying age. Again, the 34 years old are starting families, and the events of the pandemic have only moved their timeline up. They're looking for their first home to settle in. You guys know I love charts and numbers for the reason why there is a continued boom. And this is number three. There is still continued demand that is not going to disappear immediately.
Some supply coming online, but again, the demand is just outstripping it in all these communities.
Chairman Powell's goal is to continue with easy money until the United States is fully recovered economically from this pandemic, and this may not happen until 12 to 18 months from now. For those who have not been able to successfully purchase their home, they're still in the market and they're still hunting because interest rates are still low enough.
The annual appreciation looking back over 2020 was a little bit more modest, about 7.5%. But we expect this to be sustained well into 2021. There's a lot of pent-up demand from people who kept trying to buy.
People are consistently looking to buy. Now let's go into number four. There is a shortage of inventory. Home builders did not foresee this happening. At the same time, with COVID, many people were not opening their homes, were unsure of what to do. So that has caused very low inventory. Currently, the inventory in the United States is just about 1 million homes right now, which is just about 2 months supply, which is again at an all-time low, causing a shortage of inventory. Some have asked questions about foreclosures and what's happening with the government moratoria. The government moratoria has effectively stopped foreclosure activity on all properties except for those on vacant and abandoned properties. Due to the moratoria, this has been an historically low rate of foreclosure. I am going to cover foreclosures and information about this in the second part about why with certain trends we may see a bust and also a pop in the bubble. Number five, the work from home trend is still growing and many do not foresee this going back. So many people are escaping the city and there's a shift from very expensive metro cities to people going to suburbs and buying bigger pieces of land with more personal space. In fact, I have seen a larger influx of people coming to Florida who want to take advantage of the larger houses, larger pieces of properties, and it's a fraction of what they would normally pay in, say, New York, California, other large cities.
Outflow of population of any state.
Now, numbers this morning showing that outflow, or at least into Florida, just increasing and could actually now become structural. Let's look at Palm Beach. The average home price there topping $9.5 million. Sales increasing nearly 50% despite those high prices in the first quarter. There's now less than a 2-month supply of houses for sale in Palm Beach. That is a record low. We've got Miami Beach average sale prices there up 72%, with condos in South Beach more than doubling in price in the quarter. You got prices up double digits in Boca, Wellington, Bal Harbour, Delray, all across southern Florida.
Some examples that have been booming for suburban buyers. This includes places like Portland, Maine, Bay City, Michigan, Pueblo, Colorado, Lake Tahoe, and also Palm Beach here, along with Miami. I want to also include in this part about prices and the strength of pricing is the investments in single-family homes from investors such as hedge funds and pension funds. Some investors are starting to look at real estate to protect against potential inflation in the near future. Guys, so what does this all mean with all these factors? And this is my opinion. Even with rates that are creeping up, most economists believe that this market should still remain very strong through 2021 and 2022. There may be a little break or a breather once interest rates start hitting around 4 to 4.5%, but that won't be for next 12 to 18 months. Again, some of the factors that you should consider is just very low inventory, the demand from millennials, and also just the buyers that are already in the market. So this takes me to the last part of the video, which is the 2 tips I talked about from the beginning. So if you are looking to buy, I want to share with you 2 tips on how you can maximize your chances of getting your offer accepted. And this is outside the traditional information of putting more money down, getting your paperwork in order, and then also just being nice. One of the most important things that people forget is around being flexible timelines. I actually have a personal story. My neighbor recently just sold his home. He did not choose the highest offer, and the reason is because he was getting his home built, and it was a delay of 2 months due to certain things, and he chose the buyer with the greatest flexibility so that he could continue to live in the home for 2 more months. The other tip is around escalation clause in your offer. Now, before we get into the use of it, I just want to take you through that it takes out some of the negotiation in your offer, but in this crazy type of market, you are okay, I think, to show your hand. I also want you to make sure that when you're going through this, check with your agent to make sure that the listing does not have anything that excludes the use of an escalation clause in your offer. Some agents who are representing the sell side don't like to use this, but if you are able to use it, it is a good tool in this crazy market. So guys, I want to take you through how to use this escalation clause in your offer. As an example, if there's a property that's listed for $500,000 and you know you want it and you're willing to pay as much as $550,000 for the property, what you will do is that you will stipulate in this contract that you will pay $10,000 more than any other competing offers. So say for instance, there are 2 other offers in addition to yours, and one offer say for $500, one is for $510. In this clause, you're stipulating that you're willing to pay $10,000 more than the highest offer. In this case, it's $510,000. So you are making an offer for $520,000. This will take a lot of negotiating out of it, but it also ensures that you have the highest offer among the offers that's submitted. So I want to make sure that you understand this and use it wisely. I hope this has helped you in navigating this current wildness of a frantic, frenzy real estate market. And I hope the information I've shared with you can help you make a better decision if you are looking to buy and also to sell. If you have any questions, please leave it in the comments below. If you like the content of this video, please give us a thumbs up and subscribe to our channel. It will really help us grow. And with that said, I am going to post part 2 later this week about the bubble.
I do not think this is a bubble.
And I hope you will enjoy that. And with that said, I hope you have a great day and happy hustling towards your dreams. Take care.